So we're recording and we're going live on Facebook. It is Wednesday morning, August 10th, 2022. Man, I tell you what, it's been hot these last couple of weeks here in the Williamsburg area, hasn't it?
It's been a little warm, although I think it's not unique to just us. We have friends and family in Delaware, and they've been suffering too.
Yeah, you took a trip up to Delaware over the weekend, I guess it was, right? That was how was the trip? How was the ride up there and everything?
Crazy. We had some nasty storms roll through, so we hit traffic that we typically don't see, other than maybe going up for Thanksgiving. So yeah, it was quite a drive, but we made it safe and sound. Got to spend some time with family. So yeah, it was a nice visit.
When you go over there, do you go up 301 and go across 50, or do you go through the bridge tunnel?
It depends. Usually we just hit navigation, but if it's a time where we're pretty confident it's going to be bad traffic, like we're going to be hitting DC during rush hour, or it's a holiday, then a lot of times we'll go over crossing up the Eastern Shore. We'll take 13 up. So it's a nice scenic drive. It's never trafficy. It's longer, but you know what you're going to get, so you're going to get a consistent 5 hours versus it could be, 4.5 hours or 7 hours.
Good grief. Yeah. I like to avoid that DC area anytime I can. If I have to travel up there, I'm just bracing myself to have to deal with traffic. Any way I can avoid it, we try to do that. Can't always do that, right?
That's right.
So, hey, we've got a wonderful program coming up on August 25th. I believe we're looking at 6 o'clock. If I have it on my calendar correct, I think we're looking at 6 o'clock. Hopefully that coincides with what you're looking for. What we're trying to do is you and I and my real estate and mortgages, we're going to be talking about home buying and providing the best opportunity for learning how to be a home buyer in 2022. And I'm excited about this training because I'm excited about the things that people can do in this market. And I think we are in a great position for people to be able to buy homes in 2022. So you've got an education program that you're going to bring along to help home buyers understand what things they can do to finance their home purchase, right?
Absolutely, yes. And I have that to share with you, but it's too large for my email, and my Dropbox is saying it's maxed out, so I'm trying.
Well, hey, you know what? I'm excited to see it. I know you got a great program. You do a lot of education stuff for realtors in this area, so I know you've got some valuable information to share, and I'm looking forward to us being able to share that with the public out there. So if you're watching this, look for more information about a home buyer education program that Kevin has put together that we'll be sharing. And that'll be on August 25th. It'll be a live event. It is something in person. We're going to be providing refreshments, probably get people some pizza and, refreshments, something to drink while you're there. Enjoy the evening, be about an hour and a half, and then some opportunity to, talk to people about finance, talk to people about, what kind of things they can do specifically. So there'll be a one-on-one opportunity where people can ask you questions directly. People can ask me questions directly, about the real estate market and so forth and so on. So this is right here in the Williamsburg area. We're going to be in Yorktown, but it's for anybody that's in the Williamsburg Peninsula area of Virginia. If you're looking to buy a home, this is going to be a great little program for you to learn more about the opportunities for financing, what you can do, things to help you get ready to make that home purchase in 2022. So
you think it's still a good time to buy?
I tell you what, I think this is probably the best time we've seen in years to buy a home. And I will suggest this is something that is kind of contrary to people's maybe understanding right now, because, there's all this talk about market crashing and stuff like that. Well, I tell you what, real fundamental, just something that was poignantly pointed out to me on an investor podcast that I was watching overnight. And there's a huge difference between what's happening now in real estate versus what happened in 2002, 2007, 2008. Now, I was in real estate in 2007, 2008. I saw it happen. I saw what happened to homeowners. I saw what happened in my business. And I tell you what, it was bad. I mean, it was a horribly toxic situation in the real estate business, the real estate market. It affected a lot of people and it affected a lot of people's incomes and so forth. In that case, real estate was not the victim of what happened in the economy. Real estate and the mortgage lending, not you, but mortgage lending practices at the time, from like early in the 2000, around the 2000 timeframe on, those lending practices where buyers were able to get loans for homes that they could not afford. No doc loans, they called them liar loans. Those were so prolific in the marketplace. People were able to borrow 100%, and then they would get their home and refinance it. So there were homes being sold before the contract would even close, and they were making profit on that. If it was a new home, it was a crazy market. People were buying homes based on appreciation. Lenders were willing to lend home based on the future of that appreciation. No documentation, no equity. It was a bubble ready to pop, and it finally did. We're in a completely different situation now. Now there's headwinds in the economy, but real estate is somewhat held victim to some of that, because those price appreciations that we had are going to level off. So that leveling off is when we're referring to a housing downturn, it's a downturn of the acceleration of home price increases. And it feels like a downturn, but it's actually a leveling off. So that downturn, when you're in an airplane and you've been going up and you've been going up and you've been going up, and then the airplane at about 20,000 feet starts to level off, it feels like, you're going down. It feels like it's diving. No, it's not. It's actually kind of decreasing its elevation. It's decreasing its rate of altitude climb.
Right.
And that's kind of where we're at. It feels like it's dropping, but it's not. It's actually leveling off. And statistically, you had just sent me let's see if I can make a share here.
And when you're flying, that's the safest place to be. The way up, the way down, they're the most dangerous. While you're just cruising, that's the safest place to be. And guess what? It means that we're in a good, healthy market.
Yeah, we are entering a more healthy market. I think that's my point, is that we have been in a really kind of oddly infused market. It's been an artificial market. The market that we've had in the last 2 years has been artificially fueled by infusions of cash. It's been artificially infused by sort of just these strange things happening in the economy, and from an investment standpoint, real estate got so much, people were so fixated on it that it kind of blew up. Now, the other thing was people didn't want to sell, so we have this inventory crunch. Now, the inventory crunch is not going away, but this is really good information that you sent here in this little email, regarding the number of bidding wars as the inventory is increasing and the buyer pressure is decreasing. There's still a lot of buyers out there, but we are seeing fewer there's still multiple offer transactions.
Sure.
The number of bids that are coming in on some of these homes is certainly reduced today from what it was a few months ago. And that is making it easier for home buyers to buy a home. We're also seeing an inventory increase. I believe this is the inventory graph. There was a huge inventory. I can't see where these numbers are. I believe this is going back to 2012 or so. And you can see how high the inventory was way back then, over a decade ago, and then it leveled off. We had a little bit of a healthy market here for a while between 2014, 2017, 18, and then things just absolutely dropped off after 2019. Before the pandemic, the inventory levels were dropping off like crazy. We had historic lows coming into 2020, and then we hit more historic lows, and even we hit the bottom probably in inventory, I believe, in the last part of 2021, early part of 2022. And now we finally have an increase in our inventory. And right here in the local Williamsburg market too, see if I can find my graph. I'm not even going to try to go into that because it's actually in my MLS page, but back to this over here. So home ownership is more affordable than renting. And as we see rents are continuing to rise, they may level off a little bit. That increase in rents may kind of start to level off too, but mortgages are more affordable in many cases than rents. And it goes back to the statement of, whether you rent or whether you buy, you pay for the space you occupy.
Yes, sir. And it looks like those rents are climbing fast. Looks to me like it might be a good opportunity, a good time for the people to start thinking about buying rental properties.
Well, that's something I was listening to the Bigger Pockets podcast. And if you're interested in investing, I tell you, one of the places to just get information about investing is Bigger Pockets. If you are at all interested in real estate investing, go to biggerpockets.com, listen to their podcast, learn some of their information. There's a vast amount of information in there. You can become a member, you can become a pro member and get all the inside information on real estate investing. Awesome stuff. But yeah, absolutely. Multifamily investing is going to be a huge opportunity. And one of the things that's really cool that I don't think a lot of people understand is as home prices are less and less affordable, and the increase in interest rates maybe makes it a little bit tighter for some people. There are opportunities in the marketplace that a lot of people don't understand or maybe ignore, or maybe they're afraid of. But I tell you what, there is an opportunity for wealth creation and wealth building that particularly for younger people, maybe it's a little easier to do this. 2 to 4 unit home investment. And when I say 2 unit would be a duplex. 4 unit would be a quadplex. If you own or are interested in purchasing a multifamily unit and having that cash flow income as part of the income that pays your mortgage payment, if you can share a house with somebody or share that building, you get to live in one of those units, and you got maybe another family or maybe 2 to 3 other families that are paying your mortgage payment for you. Talk about a wealth creation opportunity. How can somebody get into that using your mortgage programs for that kind of a purchase?
Yeah, that's a great point. I just had somebody recently who had some income challenges. They wanted to purchase, they qualified to purchase, but they knew that qualifying might be tough for them because they had limited income. So they were looking to purchase a duplex, a 2-unit property where they could live on one and use the income from that other rental property to help qualify. And most, if not all, mortgage programs will allow you to do that. It's a little bit different depending upon the mortgage program, but just kind of hit some of the basics for veterans. You can use your VA mortgage to purchase up to a 4-unit property, and the VA will allow you to use the proposed rental income. And they say as long as there's a reasonable expectation that you'll be successful as a landlord. They also like to see that you have some reserve, some money left over. So you're not using every penny you have to purchase the house. So they want to see that you do have a financial cushion. That helps, make it more comfortable that you will have reasonable success, but you also have a bit of a cushion for any vacancies as traditionally, you don't always have 100% rental occupancy. Right now, from folks who I hear that do manage rental properties, if they do have a vacancy, they're getting like 40 applications for a property immediately. But yeah, they just like to see that you've got the capability to be a successful landlord. And that applies to all of them. You could use FHA, Federal Housing Administration. So that's for non-veterans. You can purchase a duplex up to 4 units with just 3.5% down. Right. And then there's good old conventional, Fannie Mae, Freddie Mac. They do require a bit more. Their traditional primary residence purchases, they require 3 to 5% down. If you are buying a multi-unit, they do require a 15% down payment. So it's a bit more. But again, you're purchasing something that will be money making. You're still purchasing it as a primary residence if you say you're going to live in one of the units. So you do get a lot of the cost savings of a primary residence mortgage versus buying it purely as an investment property.
Right. That's brings up so many really cool points. And one of the things that you talked about was being able to use that income. So if you've got, I'll use my home as an example. This little Taj Mahal that I'm in right here I live in a duplex. I own this duplex. it is one of my real estate investment strategies is to own multifamily properties. And I don't own a lot of them, but I own my own home and it is a duplex. So I actually have my mortgage payment is right at about just a little under $1,000 a month. I get almost $950 a month. Actually, I'm getting a little bit more. It's almost $965 a month from my tenant.
Wow.
Or the other unit. So my tenant is basically paying for my mortgage and I live here for free.
That's pretty cool.
And that's not a lot of people, not every family is going to be able to do that, but there are people that man, oh man, if I'd have known what I know now, back when I was 21 years old, I was having a great conversation with my daughter yesterday. She's going to be 21 here soon. And we're talking about these opportunities that she has with an understanding that, it's not necessarily about a get rich quick scheme. And that's something that people have been able to do recently in the last couple of years. That's been artificial. But, if you got a long-term play, owning cash flow investment property is a great way to build extraordinary wealth. And it is you can still make some mistakes. You got to be careful, understand, listen, if you want to buy a home and it's something that you're interested in doing, talk to a real estate agent that understands some of those things. There are specialties about that kind of thing. Part of the issue with finding those homes is they're not usually in MLS. There are some, but often they're not in the MLS. So there are different strategies that are involved in finding properties that might fit that category. A lot of landlords don't want to sell them. They don't like to just let go of them. So that's something, you gotta, but there's ways to get yourself into some of those kinds of properties. So that's a great opportunity. I think that's going to be something that you and I will definitely get a chance to talk a little bit more about, is financing for those kinds of things. I love that this worked great for veterans, because veterans can use their VA benefit to be able to get into some of those homes. Another quick inventory discussion, and then I'm going to let you go, is as what I'm calling shunned and ignored inventory. And I'm seeing that there are opportunities for home buyers in today's market where maybe these homes aren't quite in that pristine, perfect condition that every home buyer has been accustomed to getting basically in the last couple. These are the homes that people have been really hunting for. It used to be 6-8 months ago, if anybody put a home, almost any condition on the market, it was going to get multiple offers. There's going to be a crazy bidding war, and everything was bid out. And you'd still, even if the home needed some work, it was, the same situation is applying. Right. Now there's homes that are in, if they're in the perfect pristine condition and they are the perfect floor plan and they are beautiful, everything's updated and it's move-in ready, those homes are still going to get a lot of attention. They're going to still get some of those multiple bidder opportunities. So if you're a seller of those kind of homes, you're in great shape. As a buyer of those homes, you will be facing competition. But if you got a home that maybe isn't quite catching everybody's attention, it's an opportunity for that home buyer that has that little bit of flexibility. So that is a bit of messaging that I want to communicate to home buyers today is, hey, there are opportunities now, because there are homes that came on the market, and some of these homes have just been on the market for maybe a couple of weeks. And now that seller is starting to think, my home's been on the market for a couple of weeks. That's not supposed to happen. Well, like I said, we've got almost twice the inventory today in the Williamsburg area market that we had back in March of this year. We've got over 230 active listings for detached and attached single family homes. So that means townhomes, condos, and single family detached homes. I'm ignoring some of the multifamily stuff that also shows up in our MLS. So, but we have almost twice as much inventory today as we had 2 months ago, but we need twice as much more than what we have today before we're really in a balanced market. Right. That market is balancing, and that's that coming off of that peak. Anyway, a lot to talk about. I'm sorry, Kevin, we've gone a little bit over today. It's 10:22. And, I get so excited about some of this stuff because I see opportunities. I am seeing opportunities in this real estate market for sellers and for buyers. The great thing for sellers is, oh my gosh, now you have an opportunity to sell your home and you might be able to find a home.
That's right.
That's
been holding a lot of people back, but guess what? There's actually stuff for sale again.
There's actually inventory on the market. You have an opportunity to sell your home and find another home on the market. Now, it's still tough if you got a home sale contingency. You're still going to be battling some of those things. But if you can get yourself in the right situation, get yourself in the right mindset, make this work. There are opportunities. And I'm telling you what, we are seeing the greatest transfer of wealth in a generation in our country right now. And it's going to happen for the next couple of years. And there are opportunities. Now, I still don't think home prices are going to fall. That's not the point. But hey, we'll see what's going on. This is a great conversation. I love that we can do this on Wednesdays. I hope that people find value in this. I don't know. I'm sorry we didn't get into any dad jokes today. We'll have to do that next week, right?
Yeah, I guess. But just did you happen to hear the rumor about butter?
About butter?
Yeah.
No, I don't think so.
I'm not going to spread it. But bump.
That's awesome.
No, your silence doesn't scream awesome.
Kevin, I really appreciate this time with you, man. I hope that people really are beginning to, see that there's good value that we want to bring. And look, we're here to help people in the real estate market. We're here to help people with mortgages and their decisions. Buying or selling a home is one of the single largest financial decisions most people will make with their lives. And you want to trust that to somebody that really understands your process and what you're trying to do. So Kevin, thank you for your time. I know you help a lot of people. You got a lot of people you got to back out there and help. And got a bunch of stuff I got to do today. So I'm going to let you go.
Sounds great.
All right. I'll see you next week.
See you next week.
All right, take care.